Okay, can everyone see my screen, right? Okay. Okay, so guys, like this is, let's start on Nasdaq. So always go on a daily. I mark my high and my low. So that's my high, and then that's my low. So I don't go back test on the back and everything, go like into like last year or whatsoever. So for me, this is good enough for me to deal with, to get like the entries and everything, to break down the chart from the bigger time frame to a smaller time frame. Then from there, like what we identifying on a daily chart, we identify the highest point and the lowest point by marking our daily support and resistance. So that's my resistance, that's my support. Away together, guys. Then after that, go to step number 2. That's our H4. Step number 2, that's our H4. So when I go to H4, what I mostly actually identifying on H4, we identify the market structure by marking our higher highs and the high lows on the uptrend, obviously, and then lower lows and the lower highs on a downtrend. We all understand like the market structure. We all understand that when the market is going up, we're looking for buys, whereby we're marking our higher highs and the high lows. Okay, so now this is my H4. This is my H4, and then I'm going to use the Equestrian channel where I'm going to mark my structure. Okay, so this is my structure. So that's the high there. You need to mark that high. Remember, when you're marking, you need to mark that high. Make sure the high is marked all the time. Okay. Okay. Okay, so that's our structure. Let's just make sure our structure is actually valid. Okay, let me do this, guys. Let me do this because this can actually take a lot of time for me to be able to mark that. Right? Okay, I want to change the color. Okay, for you to be able to be visible. Okay, so that's how you mark it anyway. So sorry guys about that, my mouse. That's a high, and then that's another high, but that's a low. So and then we're marking our structure. We take it from low to there. Right, so that's our structure. The market was going up and everything. So now After marking the structure, and then for this, that the market was going up and everything, then what we need to do, remember, before we had that, and then we had a downtrend structure, whereby we had something like this. So we had that was when the market was going down, but now the market decided to go all the way up, right? So now let's not concentrate on this one too much, but I'm just making you show how to mark the structure. So the market was going up, right? And then after this, and then we go to H1 chart. On the H1 chart, that's where we identify our liquidity price. So someone was asking me during the day, what is liquidity price? The new guys that they joined, what is liquidity price? Liquidity price, I mean, LP, it's a liquidity price. You can also call it as a psychological level. So, guys, the strategy, it's actually when someone is asking you, when you're saying to them it's Mkichim, so they will be actually like, okay, what is Mkichim? Then you need to say to them, it's an algorithm trading. So algorithm trading, that's when actually it involves your mathematics and everything. There are certain liquidities and everything for us to be able to identify when we trade it. So liquidity prices is fine. Actually, it's found when actually the major banks and the major companies, when they're trading, they agree to one another whether they're taking the market and actually and everything. So remember, when we're trading, we have what we call the market makers and everything. So by this strategy and everything, I can guarantee you with a 98% winning ratio, because one thing for sure, you know why you hit a loss, you know why you are in profit and everything. You understand? So with this strategy and everything, if ever you're making losses and everything, I would advise you, my dear brother and sister, just go back to 95. Because if ever you can't trade using this strategy, then it means Forex is not for you. I'm going to be honest with that one. So if ever you can't be able to make money with this strategy, and then thereafter, I'll advise you to go back to work. All right, so now let's identify our liquidity prices. So now, our liquidity prices, they are based actually on 100 round number. We have 100 liquidity price, of which is our major one. And then we have a 75 liquidity price, of which is our minor one. And then we have 50 liquidity price, of which is our another major one. And then we have also a 25, that is a minor one. A 25 and a 75, most likely it's where actually the market is retesting most of the time. So if ever it takes the direction, and then it's going to retest on that liquidity price. So I'm talking about your 25 and your 75. So on the LP on 100, and then that's where actually action is happening. That's where big companies are moving the market. That's where actually we're making money. So wherever they go, we go with them. If they go up, we go up with them. If ever they go down, we go down with them. You understand? So now we're marking our LPs using the horizontal lines, guys. Ne? Please don't mix these things and everything. Then you don't know where actually to mark your LP. So if you can pay attention on this LP, where is our new high of Nasdaq? That's actually a major LP of 50. That's 50. I hope you guys are paying attention. That's a 50 there. That's a 50. That's where it's rejected and it retested and it went down. So what rule number is there? So that's when we're going to 15 minutes time frame on our execution time frame. That's our rule number 2. You only buy or sell when the price rejects and retest the LP, the liquidity price, of which is a psychological level. That's a LP 50. So that's a LP 50 that was rejected and retested. So we rejected the price there, and then thereafter we retested, and then the market went all the way down. I hope I'm making sense. So in this case, I'm going to mark the hundreds, and I'm going to mark the 50. So today's sell was based on 100. So today I also saw it, but I missed it because of load shedding. There was no network and everything. I couldn't execute. So when I opened my phone, it was gone already. While I was trying to look for a retest, then it was dropping all the way down. Right. So now, so that's a 100 LP. Then we have a 50 there. Then we have 100. Remember, a 50 and 100, that's where your entries are most of the time. Your 50 and your 100, that's where your entries are most of the time. So we have that 100, and then we can go down to 50. I hope you guys are paying attention how I'm marking my liquidity prices, because a lot of people are asking me how I'm marking my liquidity prices. I'm using horizontal lines, and then after that I go to parameters. I click on the horizontal what you call on the horizontal line. Then I go to horizontal line properties. Then after that I go to parameters. There's common parameters, visualizations, and then I go to parameters. I make sure I delete all I don't know how many digits are, but now all those numbers. Make sure the number when you're marking your liquidity price, you only have this number. So the plus the two numbers that are after the comma, don't worry about them. Then what you can do, you can just press enter. Then your LP is valid. So you have your 100 LP there. Then you continue to mark your LPs. Remember, you have a 50, 100, 50, 100. That's your indices. So on the 25 and the 75, if you want to mark them, you can mark them, guys. If ever you want to see the retest and everything, then you can be able to mark them. But all the time, remember, your entries, most of the time, you take them on the 50 and 100. So that's where the action is happening. So I'm going to mark until to this. This price, yeah. Then make sure I delete that, and then press enter. Then we have that. Right. Then after doing this, remember, guys, you just mark. You only deal with where actually the market is, like the current market price. Deal with the current market price. That's a 50. We have that 50. Okay, then after this, and then thereafter, you make sure you turn your chart into a 15 minutes. That's our last step there that we're doing. So this is it, guys. This is all our entries, where we get all our entries. So I want you to look at the chart. I want you to look at the chart. I want you to look at the chart and look at the current market price. Look at the chart and look at the current market price. Look at the chart and look at the current market price. Just look at it, guys. Just look at it. Look how beautiful is that sell. Now let's talk about this sell. Now the sell here came all the way from here. So I know most of you analyzed, but some of you didn't enter, didn't take the sell. Like me, I didn't take the sell because I missed the entry. So that's your 15 minutes. That's a rejection, retest, then sell. It dropped all the way to this LP. of which is 162. Then when it gets to 162, it rejects the 162, it goes back up, then it rejects the 50. It's playing between the 50 of 162 and the 100. So, and then after it dropped, it retested here again, then it went all the way down. So I want you guys to look at these LPs, how powerful it is. Look at that. The market dropped from here, and then from there it came all the way up. Then that's your TP. So I want you guys to look at this LP. Look at it. Look at the price, how it respects this price, and look at this. So also this is a reversal. Pattern. So now what we have here, we have a rejection candlesticks. So those are the rejection candlesticks. They're rejecting on top of the 16450. So where the market price is now, it's on 162. So now look at those points. How many points are those? So from here to 162. How many points are that? 250 points. Can you guys see? That's 250 points drop. That's a lot. So the Nasdaq like actually dropped 250 points. Can you guys see? Guys, are you there? Can you guys see?
Yes, Brad.
Yes.
Yes, we can.
That's
Yes,
250 points. So how do you see the 250 points, guys? The 250 points of which is your 25,000, the number after the 65. Can you see? The 25,000, that's your 250 points. Do you guys understand? When they say Nasdaq dropped 250 points, they're talking about something like this. So that's also like a mathematics, like on a liquidity. Remember, on one liquidity, on a round number from 0 to 100, you have how many points is that? That's 100 points. Are we together? So from here to here, this is 100 points because it's 10,000. Can you guys see? Are we together, guys? Are you guys paying attention?
Yeah.
And then
Yeah, we're together.
when it drops here, you have what? You have 150 points. And then when it drops here, what you have 200 points. Then when it drops until here, you have 250 points, of which is your 25,000. I hope I'm making sense. So now your entry all the time is based on the rule number 1 and rule number 2. Rule number 1, we only left with 10 minutes, guys, right? So what I'm going to do, I'm going to create another session for us to be able to take questions. So rule number 1, you only buy or sell when the market breaks. You only buy or sell when the market breaks the liquidity price and retest. So when you're talking about the break and retest, we're talking about something like this. I'll show you now. So this is a break and retest, then it retested, then it went down. You understand? That's a break and retest. Even here, this is a break and retest, then it went all the way up. Are we together? When you're talking about rule number 2, we're talking about this and this. This is rule number 2. When the price rejects the LP and retest, and then thereafter we take a sell. So that's when a sell came out, then it went all the way down there. I hope I'm making sense. Right. So that's our strategy. That's actually how we are taking the trades. So remember, we have the structure. On the structure, if you can look at that, there is a possibility for Nasdaq to go all the way up. Because why? We're rejecting that LP. And we have rejection candlesticks. And rejecting where? On top of the structure. That's our today's low. So this is today's low, this is today's high. and then thereafter we had the high where it actually completes our structure. When you can go to 4 hour, you'll be able to see what I'm talking about. I'm talking about this. So if the market breaks below this structure, then it means then we're coming down. Where are we coming? So where is our previous high, of which is this one? So if you have a Nasdaq can break, and then thereafter we're going to look for opportunity for us to break until. So that will be your target. In case we break below this structure, and then thereafter we can expect the market to go all the way down. Why we can expect the market to go all the way down is because of the guys who are using the order blocks and everything. They can be able to get this what we call this for you, where actually Nasdaq can drop up until today's price. I hope you guys are gonna take a picture of this, and then you'll remind me, and then you'll say, "Yo, Brapet and treat." I'm not saying it's gonna break. I'm saying in case it breaks, then it means our target it can be that price of 156, of which is it's 157 actually, to that liquidity price. So it can drop to our 100, which is that one. So how do you identify that? Identify with the H4 chart. Then when you go to 1 hour chart, you can be able to also see, okay, the market can likely to break this. So in case it comes back and break, but if ever we get the rejection, then we break above this, then we can likely to go all the way up. But as long as we haven't break this zone here, we are not going up yet. So as long as we haven't break this zone yet, we are not going up yet. So let's go into a smaller time frame and see what price is that zone is. So if we can look at our chart on a smaller time frame, that zone is a what? 163. So if we don't break above 163, so in this case, if ever the market will be likely to come back up here, and then after that, what's going to happen? Let's go to 1 hour, and then what's going to happen? And then after that, if ever it's not going to break, it's going to respect that, and then it means we might expect the market to drop all the way down. I hope I'm making sense. So you look at the chart in a bigger time frame, you look at the chart in a smaller time frame. The bigger time frame, the market can be likely to break here, but the market go back and retest here if ever we're going down, and then from there again, that's when we can go down. But so if it breaks above, then chances are very high for the market to go back and pass this new high and create another new high. So it means then it can go all the way up. But in this case, what controls us is the current market price. What is happening on the current market price? Yes, we got the rejection here and everything. Can the market reject up until to this price, of which is our 100 LP of 163, and come back down? I don't know, but we'll see. Okay. I hope I'm making sense. We left with 4 minutes. I can just take questions from now. You can open your mics and ask me questions. And then with these 4 minutes that we left with, we can use it also, like ask questions. And then I'm going to create another session to ask another questions. We can take questions, guys.
Brapet,
Yes, sir.
how do we execute the 70 liquidity price?
70?
Yes, in terms of when you, I agree you said it's 100, it's 70, it's 50.
No. I don't want to talk about 70. Did you read the PDF, first of all?
Yes, I did, but maybe it means I didn't.
There's no way
properly.
written 70, 75.
Okay, that's fine then.
So your question is?
How will we execute it on the chart?
How you will execute it on the chart?
Yes, as you see here, when we are using 50 and 100,
You can
you
also
will
mark
say,
75. You can also mark 75, my brother. Let me mark it for you. So this is a 25 here. I don't mark them because I know actually how I can see where the market is. Remember, you can see the price. You can see the price here, where the price is, and you can see the candlesticks. You can see. So remember, I said to you, it's more likely on the retest. You see, the retested, then it went all the way up. That's a 25, right? Then we have 75 here. Remember, I said to you, it's more likely on where actually the market is retesting. So your execution only time needs to be on the 150. You can execute on the 75, it's fine, but more likely it's like I prefer 150. You understand, Paul?
Okay.
You
Yes, I get it. Yeah.
Okay. Question, guys? Another question?
Hello? Brother Pet?
Okamba, what's up, brother?
Hello?
Yes, I can hear you.
Yes. Brother Pet, I wanted just to ask, so this strategy, you don't use the OBs
The order blocks.
on
No,
this strategy?
no, brother, look, man, you can use order blocks. You can use your supply and demand. It's up to you. But my confirmation is only in one thing, LP, nothing else. So you can, for confluence and everything, you can use them. You can mix it with other blocks. You can mix it with, you can even mix it with, what's this? Fibonacci retracement.
Yeah.
Yeah, you can also do that. If ever you're scared sometimes, actually, like you're not sure, just for confluence, you can use your order blocks. You can use your supply and demand. It's up to you. I know how to use all those things, but I can see what is happening. You understand? So for you to be able to actually to crack it down in everything, you don't need a lot of things. You don't need a lot of actually confirmation, but you only need one confirmation. Is the price when it gets to a LP, respect the price, and does it do rule number 1 and 2? If it does that, then execute.
Okay.
Yeah.
Okay. Thank you. Thank you. Thank you.
You're welcome. 1 minute left, guys. Let me create another session. So this session was recorded. I'm gonna make sure you guys get it like maybe in the morning or before you sleep. So, but I'm gonna end this session. Just rejoin. You're going to rejoin again with the same link, guys. You can rejoin. Okay. I'm gonna end this session. Then you can rejoin again.